Hello and welcome to our webcast. I'm Amy Pendergrass with Moss Adams, and I'm going to get us started for today's session, PRF Reporting and Audit Requirements Update. Before we begin, I'm going to play a brief video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
And now I would like to introduce today's presenter, Aparna Venkateswaran, Senior Manager at Moss Adams, Melaney Scott, Senior Manager at Moss Adams, and Georgia Green, Manager at Moss Adams. Their bios and contact information are located in your webcast console if you would like more details. And with that, Aparna, I'm going to turn it over to you.
All right. Thank you, Amy. Hello, everybody. Welcome back to those that have been along the ride with us the last couple of presentations we've done, and welcome to those that may be joining us for the first time. As we'll cover here in the agenda, I think we all know not a lot has really changed since the last time, we had all gathered back in December, but there are, some updates to the FAQs that we wanted to cover, some changes that have happened with the recent December relief package that was passed, the Appropriations Act, as well as the one that was just signed last week that we'll cover. The other big change that happened this December is the Compliance Supplement Addendum was released that does have some more guidance around how to audit the Provider Relief Fund. And in addition to that, one of the big things we wanted to kind of convey today is, we all understand there's a lot of questions out there and still a lot of uncertainty. And we'll dive into some of those questions that have been circulated up to HHS, via the AICPA has been very active in helping to identify some of the issues that we're running into, whether it's on the provider side to prepare for the audit or prepare for how to record the funds in the financial statements, reporting, et cetera. So we'll dive a little bit deeper into some of those questions and what some of the things are that we can start to do now to hopefully continue to prepare for this. And then we'll just wrap up with some clarifications and documentation best practices. Please keep your questions coming as you can, and we'll do our best to answer them as much as we can during the webcast. And if we do run out of time, we will be following up with you afterwards to make sure we get you some information on the questions that you're asking. All right, so we're going to jump right into the first polling question. So what entity type do you represent? We just like to get an idea of, who our attendees are and kind of what sectors of healthcare they represent. So your options are, provider clinic, hospital, tribal health, skilled nursing or long-term care, other healthcare provider, or other non-healthcare provider. Please go ahead and submit your responses now. Looks like we're almost there. We got a few more folks to respond. All right, couple more seconds, and then we'll be closing the poll. So make sure you get your responses in. And as a reminder, to get CPE credit, you would need to answer at least 3 of the 4 polling questions, 75% to get your CPE credit. So definitely be sure to respond to the polling questions as they come up. All right, so it looks like we have kind of across the board representation here. We have some from each of the sectors. So great, we'll dive right in. All right, and before we dive right in, this is similar to what we've said in the past. Everything we're talking about today, it is based on the most recently available information. As we've seen already, information has constantly changed, constantly been updated. So, definitely want to just remind everybody, what we're sharing today is based on what we know so far. Again, the deadlines, those have also been a moving target, but just making sure that, you're continuing to keep those on your radar. And same with just the communication, the HHS has been updating FAQs constantly. Some are modifications, some are new. We'll be addressing some of those, but just, making sure you have a process to stay current as much as possible. And then continuing to just document as much as you can as you go, even with some of the uncertainties that are still in place. All right, with that, Georgia, turn it over to you.
Thanks so much, Aparna. So we'll start by just talking about the PRF reporting and what it is. We've done some prior webinars where we got into a little more detail about it, but just want to highlight things that have changed and some of the key points. So I just want to make sure that as you're getting ready for PRF reporting, that you are working off the absolute most recent guidance. And the post-payment notice of reporting requirements was released on January 15th, at the same time that the portal opened up for registration only. So as of right now, I see we already have a question in the chat box about when is the deadline to report, and there is no deadline as of today. There is just a registration portal that is a different portal, keep in mind, than other portals you've used before for attestation or for applying to the phase 2 or phase 3, that Optum portal. This is a new, different portal that you should register for. I do recommend that you look at the guidance that goes along with that registration. You do need a unique email address for each entity that you're registering. And it also helps to understand if you have more than one tax ID number, you have multiple entities, how you're going to set it up. Is each one going to be separate, or are they nested under each other like parents and subsidiaries, all under one application? So definitely something you want to just make sure you're doing that correctly. And if you need to talk to someone, certainly you can reach out to us. Also, something that trips people up with this registration from time to time is it asks you to put in your payment amount. And you won't be putting in your total of all the distributions you received. You're going to want to put in just a single payment date and amount. It's really just a verification step. It's not asking you what the total award is that you got. So also just highlighting here that if you receive $10,000 or more in the aggregate from the PRF, you do have this obligation to report and get into this portal, get set up in this portal, and get into it when it does open. There are separate reporting processes for some of the targeted distributions, particularly that nursing home infection control distribution has its own special set of terms and conditions where there are bullet points about what you can use those funds for. So I always recommend clients that have both general distributions and those nursing home funds, make sure you're setting aside expenses that are specific to that distribution that you are not going to include in this general PRF reporting. There's also the RHC testing distribution, which has a monthly reporting requirement that really just has to do with how much testing you're doing, number of tests, number of positives, and there's a separate portal for that. Lots of portals with all of this, so that's its own reporting portal. And also the uninsured program. That's the program where if you have uninsured patients, you're providing testing and treatment for them, you can get reimbursed at Medicare rates. And the funds you receive through that are part of the PRF, but they're not part of this PRF reporting that's coming up. So there were a few changes that were made through the Consolidated Appropriations Act that was signed by President Trump on December 27th. First of all, it allows distribution of both the general and targeted distributions amongst parents and subsidiaries, amongst those related entities. And previously, the guidance had all said that only the general distributions could be. So this is kind of a boon, especially to some of the rural facilities that might have gotten a large rural targeted distributions and can now kind of distribute that as needed. They do say that that targeted recipient retains the reporting responsibility. I think we have yet to see how that'll actually play out, logistically once we have access to the portal itself. And it really doesn't matter. There were some concerns about, oh, well, that attestation portal has been open, since April when you got your payments. What if the wrong entity attested or the parent attested, but the subsidiary got it? It doesn't matter. They're saying don't worry about that, because the guidance wasn't really aligned back then with this approach. Also very exciting, I think the thing that impacts nearly everybody is that there are now 3 different ways that are acceptable for reporting your lost revenue. And so these 3 approaches are to do the actual 2019 versus actual 2020 patient service revenue. This is probably the most straightforward way. I'm anticipating that the portal will have just kind of fields and you're filling in numbers and it's going to do subtraction and tell you what your lost revenue is year over year. The second approach is a little more complicated. It's your budget for 2020 versus your actual 2020 patient service revenue, but with one caveat that your entire calendar year budget for 2020 would needed to have been approved and executed by March 27th of 2020, prior to. So I know a lot of healthcare entities are June or September fiscal year ends, so you might not have that full calendar year budget. But if you still want to do a budget versus actual approach, that kind of kicks you into this third bucket. Door number 3 is any reasonable method. And so this allows you to kind of do your own calculation so long as you're showing in the end that your lost revenue is reasonable and that the loss was truly due to coronavirus, not other reasons for that loss. One caveat here is that you'll have to submit some narrative along with it and your workbook of how you got there, and you're also going to be subject to additional audit scrutiny. And I'm talking about beyond the single audit, which Aparna will discuss later in this webcast. A federal audit, they'll have more eyes on you if you take that method. But we do have a lot of clients who maybe they added a service line or lost providers, but either way, making 2020 not really directly comparable to 2019 and needing to make some adjustments to their calculation. One new thing is that the reporting guidance says you need to report the interest you earned on your PRF payments. Probably not that much, but something to consider if you have the money sitting in an interest-bearing account. And the expense categories and reporting periods have not changed from the prior guidance. So you'll see if you received over $500,000, there's still those same 12 subcategories, rent and mortgage, insurance, personnel, fringe. I'm going from memory here, but you get the point. Those categories have not changed, so you want to organize your expenses into those categories that we see in the guidance document. And the period has not changed. So the first reporting is still looking at calendar year, January 1 through December 31 of 2020. So that's the first period. If you haven't used up your funds in that first period, then you look toward this first 6 months of 2021 as the second period. Will that change in the future? I think it's possible, especially since we have more distributions coming. So that leads me into this next comment. We do know that in that Consolidated Appropriations Act of 2021, they added $3 billion to the Provider Relief Fund. They have not, HHS has not announced in any way, if it's for a targeted group of providers, if it's going to relate specifically to a certain time period, if there's an application. We don't know that. They haven't announced how it will be distributed or if there'll be an application process for it yet. So we're just on standby for those details. But we do know that more funds are available to go out this year. Now, we also know the American Recovery Plan, which just was signed by President Biden last week, added another $8.5 billion to the Provider Relief Fund for rural providers specifically. So if you're rural, you probably should expect another payment. I couldn't estimate on the time, but certainly by the end of the year. The American Recovery Plan also added quite a lot of funding to the Coronavirus Relief Fund. So I'm going on a little sidebar here. This isn't directly about the PRF, but if you are a governmental, district hospital, or you have a relationship with your county or city, that might be something you want to pursue as they're going to get significantly more distributions this year related to COVID. You could be a sub-awardee of those coronavirus relief funds from the Department of Treasury. So that's an opportunity. Also, the latest legislation added $7.25 billion to the PPP, the Paycheck Protection Program. So it also expanded the loan eligibility for not-for-profits. So if that's an avenue that you would like to go down, you haven't gone down yet, or would like to, get another round of PPP funding, we certainly have professionals at our firm who are, just up to their eyeballs in PPP all day, every day, and can help you with that. We also have a lot of expertise around the employee retention tax credit. I know that this most recent legislation expanded it to 70% of qualified wages. It was previously 50%. And it's now allowed for organizations that got the PPP. So they're no longer mutually exclusive benefits. You can benefit from both of them. So definitely, this is an area where we've seen clients get, really significant tax refunds due to that employee retention tax credit, and is definitely worth looking at and seeing if that's an opportunity for you as well. I also want to mention Fema. If you are a nonprofit or governmental entity, you potentially, and you have more expenses than what are covered by PRF currently, you might want to consider a Fema application. They have now expanded the federal cost share to 100%. Typically, historically, it's 75%. So that's definitely a huge benefit. They're also really prioritizing and expediting payments related to vaccination. So if, that might be an area that you want to see, put your expenses toward Fema if you're prioritizing them in different programs. But, really, so PRF funding is funding of last resort. So something to understand, typically that would be Fema. I've heard folks say that their Medicaid agency is saying that too. But the guidance is very clear that PRF funding is funding of last resort. So it really only makes sense to apply to Fema if you have more expenses than what PRF will cover. So with that, we're going to go on to our second polling question. Again, this is for CPE credit. You need 3 out of 4 of these. So I'd like to know, how are you feeling about preparing for the upcoming PRF reporting process? I know this guidance has changed quite a bit. And Amy, you can open up the poll, thanks. The guidance has changed quite a bit, from July until now, and ping-ponged back and forth a few times. So let us know, are you feeling very comfortable with it? You're registered, you're getting your numbers together, you're ready to go? Are you working on it? Maybe not sure about if you've fully utilized your funds yet? Or is this the first webinar you've attended about it? You're totally new to it, not feeling totally comfortable. We want to know how you're feeling today about it. And let's take a look at the polling results. Okay, pretty good mix. I think, probably a lot of you have been on this journey with us, since last summer, keeping an eye on the guidance and trying to figure out how this applies as you are closing out your financial statements. So, great. Well, with that, I'm going to transfer it over to Melaney Scott to talk about some of the FAQ updates this year.
Great, thank you, Georgia. So as we know, throughout 2020, there was quite a few FAQs that were coming out, and we've seen that slow down considerably. But there were some either brand new or modified FAQs that have come out in 2021 that we wanted to just highlight today. And the first one of those is related to reporting the general and targeted distributions. Do those have to be done separately? And per HHS guidance, no, a reporting entity will submit at a consolidated level. But then that brings up a lot of questions about, well, really, how do we determine what the reporting entity would be? And HHS did include in their January 15th post-reporting guidelines document a table that does help to outline their determining, or kind of their guidance for determining the reporting entity. So that's one avenue to look at related to that identification. And then thinking about receipts for targeted distribution, and does a parent organization have to really remit and use that solely for the subsidiary that it was intended? And with the 2021 Appropriations Act that was signed into law in December, that is now no. Parent organization may allocate that distribution basically how they feel would be best for their organization. So that was a big change from previous. And then now thinking about if a TIN was purchased in 2019 or 2020, who should complete that attestation? Can the new TIN owner do it? And HHS says no, that needs to retain with the previous TIN owner. And also wanted to highlight here that that is different than a complete change of ownership, and there are FAQs as well that will address changes in ownership. So this is just availing itself to a TIN purchase. And with all of these scenarios, oftentimes when we're chatting with folks, we really recommend, if there are questions, because we know a lot of folks do have more complicated organizational structures, to consider involving legal counsel to also weigh in on kind of these elements as you're trying to determine how, reporting entity and these other pieces and parent subsidiary organizations. Now thinking about and cost-based reimbursement and how does that really relate to our PRF reporting. And in a nutshell, it needs to be taken into account and could have significant effect for folks depending on how you are reimbursed for your costs. So HHS did provide this updated information, and there have been discussions we've been having for folks where this is applicable, and in some ways it's more of a case-by-case situation of how really to incorporate this and account for it on the expenditure piece. And in a similar vein, there was a question that came up related to dish payments and how to account for those. And similar to the cost reimbursement, those do need to be accounted for and included in that calculation. So it could definitely have an effect on the when we get down to kind of the net expenditures for the expense piece of reporting. And thinking about time spent by folks on COVID-19 specific matters, HHS has provided the guidance that the key here too is it may be an allowable cost attributable to coronavirus. And again, with the caveat that not being reimbursed or obligated to be reimbursed by another source. And when we're talking with folks about these sorts of scenarios, it really is an entity-specific cases that we talk about, and how that's being captured, and some other relevant pieces. So there's not an across-the-board yes or no as far as contemplation of it being allowable. And so with that, again, it's documentation really comes into play with this, and then just looking at your specific situations to take that into account. All right, so now thinking about administering the vaccine. And this is really a very specific scenario that was posed related to Medicare Part A versus Part B, and what can we apply towards PRF. So again, costs associated with administering the vaccine and other standing up vaccine clinics, those components are allowable expenses. And then it gets back to that question of what's an unreimbursed component that then can be applied to the PRF funds. So kind of all of those fundamental pieces come into play here is really what's your cost, and then what's not been reimbursed that could be applied. And same thing with the second component here is supporting the COVID-19 vaccine distribution. And absolutely that is an allowable component for using. HHS did give the caveat that the vaccine needs to be licensed or authorized by the FDA. However, you can utilize funds ahead of the approval of those for getting ready to do those vaccines. So again, like HHS mentions here, refrigerators or freezers, personnel costs, all of those components that goes to gearing up to provide a vaccine. And then the other section, of course, that is the contemplation for thinking about reporting has to do with the lost revenue calculation. And this is a really common question that we get is that, well, we have more than enough unreimbursed expenses to fully utilize the PRF funds that we received. Are we still required to gather information and submit related to lost revenue? And HHS still, and historically also, but still has said, yes, you are still required to gather the revenue information and report it, even if you have sufficient expenses, unreimbursed expenses, to cover your PRF funds. And then another really big source of question as well has to do with, when we went to do the phase 3 application, we used the April and the May lost revenue as part of that application process. Can we just use those 2 months in our reporting of lost revenue? And HHS answer is no. The intent with the reporting component of the PRF is to look at the entirety of the calendar year of 2020. So that will be capturing revenue for all of 2020, and then whichever lost revenue method you're going to use, whether that be the budget to actual, actual to actual, or some other reasonable method, that will be looking at the entirety of the year for that. Okay, and that looks like that wraps up kind of the new and more prevalent FAQs that have come out since the beginning of the year. And at this point in time, we wanted to take the rest of the time to talk about the Compliance Supplement Addendum and thinking ahead to the single audit piece and kind of all of those things in that realm. So I'll turn it over to Aparna.
Great, thanks, Melaney. Before we dive into the Compliance Supplement Addendum, we've been kind of monitoring the questions, and there's been a few around, I think some of the attendees are asking about, supplemental payments or kind of cost report settlements, et cetera, since those are not always predictable. The timing of it is based on review and or authorization of funds. And so, the question has been, would those be included? And per the FAQs, as they stand right now, HHS stance on that is if those funds are attributable to patient care provided in either calendar 2020 or calendar 2019, those should generally be included in your assessment of lost revenues and as part of the reporting. But if they relate to periods outside of that, then you wouldn't be including that. So hopefully that helps answer questions for some of the folks. There also, I think, was a little bit of confusion from when we were talking about the Fema versus the PRF. What we were trying to convey is, I think it's generally understood that Fema, in other instances, is meant to be kind of the payer of last resort, but that is not the case with the Provider Relief Fund. HHS has said, any expenses that are going to be claimed against PRF or any lost revenue, all other funding sources need to be considered first, and that would include Fema. And so what we were trying to convey earlier is, to the extent, your analysis of the expenses and lost revenues, if they're showing that you have more expenses that you could claim that are eligible and you don't have enough PRF funds to cover it, one strategy might be to apply for Fema because Fema is definitely expense driven, that's an opportunity to get some funding to cover those expenses. And then there's the ability to kind of cover the rest between the remaining expenses, if any, and lost revenue to also use up the PRF funds. But the hierarchy would be Fema first and then PRF if there's a decision to be made between the two. So just want to clarify that as well. All right, so before we jump into the Compliance Supplement Addendum information and some of the audit information, we have another polling question. So how are you feeling about understanding the Compliance Supplement Addendum? This is sort of a pre-check before we dive into the information. Very comfortable, you're good to go, you have a good handle on the guidance, not comfortable at all, or not applicable. You can go ahead and submit your responses. In the meantime, we'll also see if there's any other questions we can answer here. Some of the attendees have also asked about the PPP2 versus PPP1. There are some very specific criteria. The SBA website has some good information around that. So definitely recommend checking out that. But generally for the companies that may be getting a second PPP loan, the criteria are different. It's 300 or fewer employees, 25% reduction in any quarter, calendar quarter of 2020 compared to 2019, and that the funds from the first loan have been used or will be used before you get the second loan. So those are a little bit more bright line, if you will, than the requirements last year. For those that may be applying for a PPP loan for the first time, the criteria is different, and the SBA's website does lay that out, so definitely take a look at that. All right, so I think we have the poll closed. So looks like a lot of folks are in Camp C, which is very understandable because there's still a lot that's open, as we'll talk about here in a minute. Okay, so the Compliance Supplement Addendum, this was kind of a very eagerly awaited document because it was going to include this audit guidance on how to do the single audits and the program-specific audits for the Provider Relief Fund. And so it was finally released on December 22nd. And some of the key things it included, just as a reminder to those of you that, had a single audit requirement, or you thought you had a single audit requirement for your 2020 fiscal year end, one of the things that the addendum provided was a 3-month extension on the single audit due date. So for a June 30, 2020 year end that may have had a single audit requirement, the original due date would have been 9 months after the earlier of 30 days from when the single audit reporting package is issued, or 9 months after the end of the fiscal year. So it would have been March 31, 2021, but there's now a 3-month extension. So entities have until June 30, 2021 to get that audit completed. Generally, it's not expected that individual recipients would have to go and get approval on a one-by-one basis to to get that extension is just automatically granted. Another big change that had happened, and I think we had covered this very briefly last time, is based on just some of the early information HHS was seeing and questions being asked, they decided that the provider relief fund expenditures, or really the spending of those funds, would not be considered as expenditures to be reported on the schedule of expenditures of federal awards until the December 31, 2020 year ends and then going forward. So the 12/31 year ends, the providers are really expected to be kind of the first of the entities to potentially experience a single audit, as we'll talk about in a minute. And then the other big thing that was clarified also is really the reporting to HHS is what's going to trigger, the CFA recognition. So if the reporting, when it does finally open, showed based on the input of expenses and the lost revenue that all of the funds were spent based on the calendar year reporting ending December 31, 2020, and that's what would get reported on the CFA. If there's a portion that showed it's not spent, then whatever portion was spent, the expectation is that's going to be recognized on the CFA, and then the remainder would be addressed in the next fiscal year. One thing that may be confusing about this, or could be confusing about this, is for our fiscal year end entities out there, this likely will cause kind of expenditures from multiple fiscal years. So because we're talking about calendar year and 2020 reporting, there's two fiscal years in there for a June 30 year end, for example, and also for September. There's going to be, expenditures that get pulled from the previous fiscal year, but they get reported in the June 30, 2021 audit, for example, for organizations that will have that audit. So that is something that likely will happen. It's just, it's not going to be incorrect if that happens, because that's how HHS is currently requiring that the CFA reporting be done. Just another reminder, to the extent if June or September or other fiscal year ends prior to December 31, if you did have any other federal funding that was non-PRF, if it does meet the threshold to trigger a single audit, want to make sure that that those are moving forward as needed, because the recognition to the CFA really only applies to the PRF program. All right. So in terms of this discussion is kind of all under the context of a single audit or program-specific audit. I'll touch on, for the for-profit entities, the other option that's allowed. I'll touch on that in a minute. But for the single audit side of the house, what are, the compliance requirements that HHS has determined are direct and material? I think it's not a surprise. The first one is activities allowed or unallowed and allowable costs. And really, they put the definition in there that's in the guidance as well, that payments may not be used to reimburse expenses or losses that have been reimbursed from other sources. And so there are questions out there around how are providers going to be tracking this, and how can then auditors audit this under the single audit. And at the beginning of the webcast, I had mentioned the SCPA has been working to submit questions to HHS to determine, some of the practical considerations that are going to apply here as a result of, if this is the requirement, how does that play out from a practical perspective? And so one of the questions definitely is, will the portal be set up so that providers would enter expenses kind of on a gross basis? So, before taking into account those other funding sources, they're entering their expenses, and then there's a separate spot to potentially enter those other funding sources, and then does the portal kind of do the calculation of those incremental costs that haven't been reimbursed by other funding sources, or is there the expectation that providers are having to do this netting process before they enter the information into the portal? That's still a big unknown, and that would drive really how that gets audited, because it's, one set of kind of documentation requirements or needs if the information can be entered kind of on a gross basis, different documentation if it's got to be entered on a net basis. And so I think to the extent you can continue to just really track all of those incremental expenses as well as you can, and really the expectation is to be able to tie back to as many source documents as possible. So if, any kind of PPE or other types of costs, if there's a way to tie them back to invoices or tie them back to your analysis of what really was truly incremental. So if you're able to see maybe on a per patient day basis what your costs might have been in 2019 compared to 2020, keeping clear documentation around that will be helpful. And the same with the other sources of funding. So if you're getting a PPP loan, you're getting FEMA, you're getting other grants, tracking those clearly in a spreadsheet as well, and kind of being able to trace back to cash receipts, et cetera. So it's very clear that, you're taking into account all of the other funding sources that should be taken into account, will be critical to ensure that you're able to report these expenses correctly. A question came up around time. There's, the cost of labor. I think there's a variety of practice out there. Some providers were kind of able to track, different separate schedules where, staff or nurses that were kind of, serving in a COVID wing or doing, time spent testing, et cetera, or there's training costs. There had maintained, separate logs or separate kind of schedules that are put into place to help continue to update to say these are kind of the incremental costs. Others were able to modify their timekeeping systems or tweak their timekeeping systems to be able to code kind of a specific labor COVID code for time entry. And if there is some sort of allocation that providers may have done, for example, so maybe they said for administrators that were spending some of their time addressing a plan for how we're going to address COVID or dealing with changes that came, et cetera, was there some sort of a methodology to allocate a portion of that time? The more, again, documentation that can be maintained around the inputs and assumptions and the thought process that's gone into how those costs are being identified will be critical because, again, it's about being able to just take that information and audit it and come to a conclusion on that. Now, all of these kind of options I've given you, these are what we're seeing in talking, with our clients. What we're still waiting for is definitely more clarity from HHS on, is there going to be some preferred method that they may have? And one example that I'll use here is in the FAQs, they've provided an example of a kind of incremental office visit cost. There's like 3 or 4 ways they talked about that. And so the AICPA has a question around that out to them as well, is, generally, if patient volumes drop, sometimes the costs don't drop because there's a lot of fixed costs that are not able to be reduced, as a result of those patient volumes dropping. And so, what are going to be the methods that would be acceptable to calculate that kind of marginal cost, and what is the expectation that those costs, because the requirement is for the larger PRF amounts to report them in subcategories. And so how can providers report that on a kind of a subcategory basis, and what's the expectation? So still a question that's outstanding. And then, another question around expenses. There's been, I think, several FAQs that do contradict each other somewhat around depreciation expense or capital assets that are purchased, that are attributable to COVID, whether there, is there the ability to potentially expense all of that for PRF purposes but continue to depreciate it for financial statement purposes, or is it depreciation? There's still, some unknowns around that in terms of what it is that HHS wants to see as far as like items like depreciation expense. And then the other sources of reimbursement as well, like, as we've been talking about in 2021, there are additional funding sources that are available. And so how are those going to be addressed and considered kind of in addition to what's already been put out there? So definitely lots of confusion still out there. And I just, reason of going through all of this is to provide you with a flavor of, this is going to be a lot of information that's needed to be able to, figure out from your perspective as a provider, how am I going to prepare documentation? How am I going to gather the information that I will need for the reporting, as well as to be able to support kind of the audit? And then, secondly, how can we as the auditors or your auditors come in and audit that information? So hopefully we'll continue to get those questions out through the SCPA, and we'll hopefully start to see some additional information come through. But for now, these are some of the things we have. Specific to the skilled nursing home infection control distribution, they do list very specific examples here, or what they expect to see as allowed to be, using the PRF funds. So it's the COVID testing, reporting the test results, hiring and retaining staff to provide patient care, improve infection control. And so for those of you that got these distributions, again, it'll be critical to clearly be documenting, the nature of your expenses. Do they fit one of these categories that are allowed under this part of the Provider Relief Fund? All right. The other compliance requirement that is directly material is the reporting. And this is also, even more than the expense discussion and the lost revenue discussion, this is really the biggest unknown, because with the reporting, the expectation is once the portal opened, which was supposed to open in theory back in January, the Office of Management and Budget was going to issue additional guidance, because to comply with the single audit requirements, the auditors are expected to be testing some key line items and information that is part of the reporting. Obviously, since the portal is not open yet, there's no definite timing of when it'll open. It's still an unknown of how detailed or involved these audit procedures would need to be. And also on the flip side, how detailed and involved the reporting would be on your end as you prepare for it. And so there are some questions around that as well, because the longer it takes to get the portal open this year, the longer it takes to, kind of get everybody prepared. It's not necessarily going to be as easy as portal opened on, say, June 1, for example. It's not like everybody can just pivot and start reporting and then the audits can kind of start to fall into place. There will be, some time needed for all of us to make sure we're understanding what the portal looks like, what some of these other questions are that I've been talking about look like, and, then going from there. So even though the reporting would be occurring in 2021, it would still be subject to audit as it stands right now, subject to audit as part of the December 31 single audit. And so a lot of unknowns there. One of the other questions around the reporting that the ASCPA has brought up, and I think some of you have asked this in the webcast as well, is for the phase 3 payments, some providers got them before the end of the year, before 12/31. Others have gotten them in January and February. And so there is still a big question around, for those that got the money in 2021, is the expectation that would be part of the 2020 reporting, or would that be part of the 2021 reporting? That also has financial statement impacts of how the revenue gets recognized. And so, our experience in talking with our clients, it is kind of a facts and circumstances based discussion as far as the financial reporting goes. But it's still a big unknown as far as whether the 2021 payments would end up getting captured as part of the 2020 reporting, or if it would be separated. And that also would impact potentially the single audit or program specific audit thresholds as well. The other thing with revenue, so one of the pieces that the HHS has talked about, and this again is important in the reporting as well as calculating the lost revenue, is any kind of add-on payments that may have come through specific to COVID. So a couple of examples would be, the reversal of the 2% sequestration. There's the 20% IPPS payment from Medicare. The key question there is it something that, those kinds of payments, are they supposed to be considered in step 1? So are they kind of part of the funding sources that need to be considered before looking at PRF? Or is it part of the patient revenue that would be considered in the lost revenue calculation in step 2? And that could have, a significant difference potentially in whether it's calculating the expenses or calculating the lost revenue. So it's important that we understand, where those amounts are expected to be reported, because, again, want to make sure the reporting gets done correctly and that, ultimately HHS is getting the information they need. The other question that's come up is around So the fiscal, the option to be able to use budget to actual for the lost revenue calculation, I think Georgia had mentioned earlier, the budget had to have been in place prior to March 27, 2020. So for our calendar year ends, that's probably pretty straightforward. But for the fiscal year ends, they likely would not have a budget that was in place before March 27, 2020 that would span the whole calendar year, because that's 2 fiscal years that are in that calendar year. And so in theory, based on the current guidance, that if providers that have a fiscal year end, and we'll use June 30 as an example, they could end up with a hybrid where for the first 6 months of the calendar year, they would have a budget they could point to that was in place before March 30, but the last 6 months of the calendar year would not have a budget in place potentially before March 27, depending on timing of when budgets annually are done and authorized and approved, et cetera. So this potentially could be option 3, which is what HRSA has indicated and HHS has indicated could be subject to higher scrutiny, higher kind of audit requirements separate from the single audit. So it is a question, like, is that really the intent from HHS, or is there maybe another category that needs to be considered? Because a lot of our providers out there that are fiscal year ends, almost everybody's going to have this situation where there's going to be some hybrid method that has to be used. So big open question there as well. And for the for-profit entities, so we've talked about this previously, but just a quick reminder, for-profit entities have 2 options. They can get a program-specific audit or a financial audit of the PRF that's done under government auditing standards. And generally, we've been pointing to this Compliance Supplement Addendum. However, it's not at all clear that that would be the guidance to be used in how providers would prepare the provider relief fund schedule that would be audited. What's the questions are there around what's the format expected to be of that schedule? What's the basis of accounting expected to be? What is the scope of that financial audit for those that would pick that option? It's not clear that we would use the guidance from the Compliance Supplement Addendum to be able to do the audit, the financial audit of the provider relief fund for the commercial and for-profit entities. Also, there's still a lot of uncertainty around the deadline for the commercial entities. So I think, as I mentioned, the single audit side, the deadline is, at least by 9 months after year end, the audit has to be completed. So for the 12/31/20 year ends, that would be September of 2021. But for the for-profit entities, it's not clear that whether HHS is expecting the audit to be done similarly, so if the same timeline applies as well, and also just how the scope of that audit would look like. What are the things we would need to be auditing? What are the things providers would need to be preparing from a documentation perspective? The single or program-specific audit definitely has a lot more kind of transactional level testing that's done to be able to test the compliance, especially around the allowable costs or activities. It may not necessarily be the same under the financial audit of the provider relief fund schedule. And another question around this goes back to reporting, that a similar questions that our attendees have been asking is, the reporting, whether it's done at the consolidated level for organizations that have parent subsidiaries, and really how does that translate to an audit requirement? That is a big difference out there. So if a particular TIN, a standalone entity, got a targeted distribution and is expected to do their own reporting in the portal, does that mean they have to have their own single audit done? I don't know. We don't know the answer to that yet. That's another question that HHS is still pending getting us a response. So there could be some pretty significant changes potentially, depending on what HHS comes back with, whether it's, the reporting has to be done at the consolidated level or standalone level, as well as how those audits then would be done for the single audit. Excuse me. So those are just some of the questions I wanted to go through. I know I covered a lot there, but really it all goes to demonstrate that there's still a lot of unknowns. There's still a lot of uncertainty. I think, as George had also mentioned, it's very possible timing could continue to shift. We've already seen that happen with the portal opening. We don't know yet when that's going to open. And there's kind of a trickle-down effect from there of what all ends up kind of getting pushed out as a result of that. So really quickly on the CIFA, so I think I'd mentioned this already, but what's on the CIFA is going to include everything that's reported through the calendar year on December 31, 2020, and there would be a disclosure that's included in the footnotes to the CIFA that's indicating as such. For all of the fiscal years that'll end June 30, 2020 and 2021 and after, the OMB has basically said the next compliance supplement that comes out, the 2021 compliance supplement, will address kind of audit requirements as well as CIFA recognition to be able to understand if they're going to be the same recognition requirements and compliance requirements as what the current supplement is talking about, or if there might be changes. So for now, that's also another unknown. All right. So we have our last polling question. After all of that information dump I did with all of you, would you like, support in any of the following areas, whether it's preparing for the provider relief fund reporting, preparing for the single or program-specific audit, applications to Fema or any other funding sources, and any other COVID-19 related issues such as the PPP, employee retention, compliance issues, etc., or don't need any additional support at this time. You can go ahead and respond. In the meantime, Georgia, Melaney, any questions we can continue to answer?
I'm going to unmute myself. There are so many good questions in here. I saw a good question about, with Fema and PRF, how does that work with reporting? I'm kind of putting an answer together for you right now, but it's a bit of a gray area since PRF is funding of last resort, but with Fema, you'd be applying now, but you might not get the payment for a ways down the road. It's really not clear in the guidance right now whether you would be able to kind of go back to your PRF reporting later and refile it and update that information if you get additional funding sometime down the road. So I think the most conservative approach you can take is just to keep those Fema expenses off of your PRF reporting. So if you're applying to Fema, just make an assumption that you'll get it funded by Fema and don't put it on your PRF reporting, and that way you don't run into that duplication issue in the future. But that's me just kind of making a guess, assuming that you won't be able to go back in and resubmit your PRF report. That's one I'm seeing that was good. Oh, we've got our poll results here.
All right. Okay. Looks like all of you guys have it all handled. Most of you picked the do not need additional support at this time. So that's good. You kind of have a handle on what's going on. One last question I wanted to address before we dive into the last part of this, Georgia, was just, I think there have been some questions around just revenue recognition related to the funds, especially the 2021 funds, and what's the expectation from once the window of January 1 to June 30, 2021 ends, is the expectation all of that revenue gets recognized? Generally, the answer would be it depends. There is a possibility, at least the way everything stands right now with the guidance we're seeing, there is a possibility that after kind of these 2 rounds of reporting, if there are potentially funds that are still showing as unspent, provider relief funds, there is a possibility those may be funds that are expected to be paid back to HHS. So the revenue recognition would really be a facts and circumstances-based assessment based on those expenditures and lost revenue that providers are seeing out there. I just wanted to address that last one. All right, Georgia, turn it over to you.
Okay, fantastic. So, as I just mentioned, there's some things we don't know, some clarifications that we'll be looking for in future guidance. So, of course, we're eagerly awaiting reporting portal access or some snapshots and instructions. I would anticipate that when they open the portal, they'll also give us some good, kind of PDF guidance documents and definitions of all the fields that are in the portal. So we're on standby for that. That's the biggie. There's also just some outstanding questions that come up a lot in our discussions with clients, like whether regular patient and payer reimbursement versus only COVID-related supplemental payments should be netted against expenses, because that can be kind of tricky to figure that out. You know, what of your normal reimbursement that you get, how much of those kind of supply costs is that really covering? Let's see, should revenue that is not directly related to charges, so if it's not kind of a volume dependent source of revenue, should that be included in the lost revenue calculation? We see a lot of folks that get quality incentive payments, or maybe fees that you get for one of your staff being a medical director. You know, that's not really tied directly to patient care, but it is related to patient care. So there are some things that are still in the gray area. And I think, you know, probably the best you can do right now as you're pulling together your numbers is just kind of keep it on a separate line. And that way you can leave it in or pull it out pretty easily when we have more guidance on that. Or, you know, either way, even if we don't get more guidance, that you're documenting what your thought process was there. And the ability to adjust and resubmit in the future, as I just mentioned. We have some best practices here. We've gone over these in other webinars, but in general, you know, documentation, standard accounting, best practices is really key. You know, keeping track of your receipts and your management decisions and board meeting minutes that relate to these expenses, all really important. Keeping your records for 6 years. And this is just kind of a really high-level example of, you know, we advise our clients to develop a COVID funding master tracker. And this is, you know, just showing that you can set it up any way you want. I've seen it done, you know, 100 different ways with 100 different clients, but just the idea being that you have, you know, the date, the award amount, what it was for, what are the eligible expenses that you're counting it toward, or lost revenue counting it toward. And it really just helps, especially for those of you who are not familiar with grant accounting, to prevent duplication and make sure that, you know, you're not double dipping anything. There's a lot that we can help you with, you know, everything we talked about on this call, and then other folks on our team, like I mentioned, who work on PPP and the employee retention tax credits, help you with other grant applications, as well as, you know, important to keep that funding flowing during these times. And, you know, I see we have 100+ questions in our chat box, so we've been working to respond to a lot of those, and we'll do our best to follow up with you in the next few weeks. So I'll hand it over to Amy to finish out.
All right, thank you. And thank you, Aparna, Melaney, and Georgia, for a really great presentation today. And thank you to our audience for your participation. We did have well over 100 questions come through, so we'll do our best to follow up with you after the webcast. And as a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in your console. And if you participated as an individual and met all requirements, your certificate is available to download now in the CPE progress window. We will email out a copy within 3 weeks should you have difficulty downloading it now. And here is a link to an online survey where you can provide feedback for today's presentation. Please take a minute to complete this survey, as your feedback is very important to us. Thank you for joining our webcast. We hope you'll join us again next time.